Hello everyone, welcome back. In this video, we are covering a recent change in Turkey's export regulations that affects businesses bringing foreign currency into the country. On May 2, 2025, the Ministry of Treasury and Finance of Turkey announced that the mandatory conversion rate for export proceeds has been increased from 25% to 35%. And this change takes effect on May 5, 2025 and will remain in place until July 31, 2025. What does this mean for exporters? Companies that export goods or services from Turkey and receive payments in foreign currency must now convert at least 35% of those funds into Turkish Lira. This conversion must be done through the bank that receives the payment. That bank is then required to sell the same amount of foreign currency to the Central Bank of Republic of Turkey on the same day using the official foreign exchange buying rate of the Central Bank. Once the transaction is completed, the Turkish Lira equivalent is deposited into the exporter's account. It's also important that this transaction is accurately recorded in the company's accounting system. The rule applies to export revenues documented with an export proceeds acceptance document or a foreign exchange purchase document. And these are standard forms used in Turkey to track export-related currency inflows. While this is a temporary measure, it may be extended or revised depending on economic conditions, so staying up to date is important. This regulation is particularly relevant for exporting companies, customs brokers, accountants and financial advisors, banks and audit firms. And the key points to watch out for. The 35% conversion must be done on the same day the payment is received. The official Central Bank of Turkey buying rate valid on the transaction day must be used. The Turkish Lira amount must be correctly reflected in the accounting records. Only proceeds covered by expat or FXPD are included under this rule. Delays or inaccuracies in applying the rule may cause problems in accessing export revenues and could lead to financial consequences. To summarize, from May 5 to July 31, 2025, 35% of export proceeds must be sold to the receiving bank and then transferred to the central bank. The Turkish Lira equivalent will be credited to the exporter's account, and all steps must be handled on the same day using the official rate, of course. Thanks for watching, and I hope this explanation helped clarify the updated process. See you in the next videos.